Okay, so let's start with the first and easiest way to make sure your child is a millionaire. And by the way, this is a millionaire, not like necessarily tomorrow, but at some point in their life, they will be a
I
millionaire.
think we got to get out of that mindset, right? Like success takes time, wealth takes time, generational wealth obviously takes time, but you have to start somewhere, but it's not going to happen tomorrow. I think people get that conception. Like we're so used to saying, all right, let's get rich quick. No, let's get wealthy and stay wealthy for a sustained amount of time.
So the first thing and the easiest pathway is life insurance. Think that that's something that everybody should have, whether you're a parent or not, but definitely every parent should have for sure. So by now you probably heard of life insurance. So I don't think you need to actually have an explanation of what life insurance is, right? It's pretty self-explanatory. It's insurance on your life. And everybody's going to pass away at some point. So when you do pass away, your beneficiaries will get money when you die, right? You buy a policy, you pay a premium, your beneficiaries get money when you die. That's pretty self-explanatory, pretty easy to understand.
Mm-hmm.
But there are some things that you need to know about life insurance. So there's different types of life insurance. This is important. Okay, so we're going to talk about 3 types of insurance: term insurance, universal life insurance, and whole life insurance. They all have different, and mind you, this is a video that we're going to cover 5 different topics. So it's not just an insurance video. So we're not going to go for 40 minutes into insurance, even though we could. But we have other videos on our YouTube channel about insurance, but this is just an overview to kind of get you on track. So, okay. Insurance is vitally important, obviously, when you're creating generational wealth, because that is a guarantee that your family or your child, whoever you provide the beneficiary for, will get upon your death, right? So term insurance is the easiest way to go about it as far as premium is concerned, right? It's the lowest premium. It lasts a term. So if you have a 20-year term policy for $1 million and you're 35 years old, then that might be $30 a month, right? If you're healthy, that might be $30 a month. So the benefit of that is that you're able to get a larger policy for a low premium, right? Because a lot of times what stops people from getting large policies is the premium. So that's the benefit. Now you might say, okay, well, why do I need $1 million life insurance policy if I make $100,000 a year?
That was really my question.
So yeah, rule of thumb is that you should get at least 10 times your salary. Some say 20, because let's think about this rationally. If you make $100,000 a year, right, after taxes, that's probably around 70.
Mm-hmm.
So most people income usually increases over the course of time, but let's say it doesn't. Let's say it just stays at 70,000. So now if you have a $100,000 policy, then your $70,000 contribution to your family will be done in a year and 3 months, right? And they still have to live for another 18 years of if you have a baby, or 10 years if you have a 10-year. Like, so you want to make sure that your income is provided for at least 10 years. So if you have $1 million policy and you make $100,000 a year, then that $1 million policy now invested into the stock market, you could probably pull around 5% safely, 7% if you want to be a little bit more aggressive. But now you could really pull almost close to the amount of money that you made as yearly, right? From just the growth in the stock market. So that's how you come up with that number. You want to have a larger number death benefit as opposed to just the amount of money that you actually are making per year.
Yeah, and this is one of those. I mean, literally, that was a conversation that we had. We sat at the table. I'm not even thinking of it in terms. I think most people in that age, that 23 to 24, 25, they're thinking like, why should I be thinking about when I'm going to die, right? And it's one of those things that I remember the answer you gave me. You're like, well, everybody's going to die, so you should start thinking about it. And I was like, that was harsh, but yeah, you were right? Like, I don't have a family now, right? I don't have any responsibilities other than myself. This is the perfect time. Number one, I was in the best shape of my life, which is important. I'm sure you're going to talk about that, right? I was healthy. I didn't smoke. I didn't drink. All these things are positive for people who are trying to give me policies. And when I realized it, right, that $1 million number sounds like a lot. But the way it was explained was like, yo, if you do a term, like it could be low cost. It could cost you $29 or $39 or $49 a month, which I don't think most people understand, right? They think if it's $1 million, I can't afford to have $1 million policy. But when you break it down, it's like, wait, $29 a month. That's my phone bill is triple that. Right. Like these are the things that mindset and the education that we don't have and we kind of miss. And this is how sometimes wealth is passed without us even knowing.
Or they think that they don't need $1 million policy.
Right.
It's like,
Why not need that much?
And this is a common misconception as far as like to say like, I don't need that much, or I don't want to leave too much money. You can't be overinsured. So there are guidelines to how much insurance that you can actually get. So if you make $50,000 a year, you cannot get $100 million life insurance policy, right? You can't get a $50 million life insurance policy. So being at these guidelines, that lets you know that you should get to the max of what's allowable, because there is no such thing as being overinsured or having too much insurance. The insurance company is not even going to insure you for things that don't make sense financially. Like if you make $50,000 a year, you don't need a $100 million policy. So that lets you know that they in their mind already have a number of what you actually need for your family.
That's a great point.
So you shouldn't go against something that's already set for you as far as the insurance company. Like don't under-insure yourself.
Yeah. And that's a great point. The other part of it is as you start to accumulate more money, then that should change, right? So like if I started out making 60,000, then I made 100. Now by the time I'm finished teaching, I'm making 150. Yeah, that needs to multiply by 10. So my policy probably needs to be updated to a point where it now matches the money that I was making because my family is relying on that.
Yep. So there's pros and cons with term insurance. The pros of that is low costing premium. That's the biggest pro. The con, the biggest knock against term insurance is that it's for a term. It expires. So if you get 20-year term insurance and you're 25 years old, it's going to expire when you're 45. Now, most people that are healthy when they're 25 are still going to be alive when they're 45. So in that scenario, you would have paid premiums for 20 years. And some people would say, well, I have nothing to show for it. Like, it's just a waste of money. But that's true with any insurance. If you have a car for 20 years and you never get into a car accident, you don't look at it like, well, I paid car insurance for 20 years. I wasted it. No, you have to have the insurance just in case something happens. Or fire insurance or flood insurance. If you really think about it, everything. Insurance that you have.
You can't get a phone without insurance.
Yeah. The point of it is to not ever use it.
Right.
So life insurance is the only thing that we look at where it's like, I have to use it, right? Every other insurance, you just have the insurance and you hope that you never have to use it. And if you do have to use it, it's there for you. That's how you should look at the life insurance the same way. But it will expire. And now at 45, if you want to get new insurance, you're going to pay a higher premium because you're 20 years older. And then you might not even be able to get the insurance if you have some medical issues or, something like that. So that's some level of negative con that can go along with the term insurance. But the alternative to term insurance is what we call permanent insurance. That's permanent. That's insurance that lasts forever. So there's two types of permanent insurance for the most part: universal and whole life. As I said, there's different types of universal, but we won't go too in depth because it's not a life insurance class, but it's important for you to know. Whole life insurance is the oldest when it comes to permanent insurance. It's the most conservative. It's guaranteed. So there's money that grows inside of a policy, which is called cash value. This is important to understand because that's a double-edged sword. You have a death benefit, but as you pay a premium, portion of that premium actually over the course of time grows into cash that you can actually borrow from. So you might have $1 million whole life insurance policy, and in 20 years, you have $200,000 of cash value that's grown inside of that policy. You can borrow from that if you choose. And that's money that you can actually utilize to go for your child as well. You can pay that college tuition, or you can do anything. You can put a down payment for a house. You can start a business. If you need money, then you can take money from a life insurance policy while you're still living. The whole life insurance, as far as premium, is the richest. So that's going to be the highest premium on the chart, right? But once again, it's guaranteed. So how the money grows is through dividends that the company pays and through set interest rate. So over the course of time, you probably earn around 5%. If you look at it from a long-term perspective, you'll probably earn like 5% interest on the money as it's growing inside your account. The alternative to that is universal life insurance. So universal life insurance is like a hybrid where it's whole life in the sense of that it lasts your whole life, but there's different ways how the money can grow. One way the money can grow, some is called variable, where you can invest in the stock market, and that's variable. It can go 25% one year, or it can be negative 8% one year. Another way is through an indexed account, where that's usually capped in like 2% floor and then 12% and track the S&P 500. That's the way to invest in the stock market, but you have guardrails on it. And then another way, there's a hybrid to this whole thing, which is called guaranteed protection universal life. So this is good for people that say, I don't want to invest money in life insurance, but I don't want something that's going to run up. Universal life insurance is pretty much like a lifelong term policy where it lasts your whole life, but it's not designed to build cash value. So you pay a premium, you have a death benefit. That's going to be the lowest costing permanent policy that you can have. So all of those type of policies, the good thing with term insurance also is that you can usually convert it. So if you need $1 million of insurance, but your budget is $200 a month that you can pay for insurance, $1 million a whole life might cost $1,000 a month. $1 million a term might cost $20 a month. So you're probably not in a position to pay $1,000 a month, but you could do more than $20 a month. So what you can do is a combination. You can do $200,000 of, or $100,000 of whole life, right? Let's say, and that's $100 a month. And then you do $900,000 of term insurance, right? So now this whole package might cost you $130 a month, right? So the benefit with that is that you still have some money that you're actually saving. You have some portion of your portfolio, just like investing, you have a portfolio, some portion of your portfolio that's going to last forever. But then you have another portion that over the course of time, you can transition that to the permanent. So life insurance, step one, vitally important.
I'm cooking.
Easy to do.
Cooking.
And that's the easiest way to ensure that your child becomes a millionaire.